Welcome back. This is Chartbusters. We're struggling to hold at higher levels for the markets. 647 is where the Nifty is, a little of the high point of the day. HDFC Limited, that one is at the low point of the day. But let's get chatting with the management of a company, Escorts. That stock is on our radar. A lot of tailwinds for the company. They reported very strong tractor sales in January. The other positive, the big push coming in for agriculture in the union budget, and also the third quarter numbers, which looked fairly strong for Escorts. We have Mr. Bharat Madan, the CFO of the company, joining us now. Thanks a lot, Mr. Madan, for joining in. A lot of tailwinds for the sector. So let's get started with your numbers itself. You know, the third quarter, take a look at the mainstay business of yours, the agri-machinery tractor business. The margins expanded from what, 10% to 15%. First 9 months, you've done around 13%. And do you think you will reach your 15% target before the end of FY19? A lot of brokerages are penciling in 14% by FY20. Do you think there is a case for overshooting that target?
Well, we definitely had given a guidance of further improvement in the margin next year in FY19 by about 100 basis points. So now whether that takes us to 15% or beyond or less than that, I think we'll have to see how the year ends. So this year we expect, I think on tractor we should be ending somewhere around 13.5% EBIT margin. So maybe we'll be still slightly short next year, but let's see. I think it's depending on how the industry performs, so maybe we can really reach there.
All right, Mr. Madan, but we should work with the number of in the range of what, 13 to 14%? That is definitely doable at least?
Yeah, that definitely looks doable.
That definitely looks doable. Great. Also, Mr. Madan, since we're talking about the tractor sales, fairly impressive. This year you've done a growth of around 18.5% for the first 9 months, 10 months that we have with us. What kind of a volume growth number are we looking at, sir, for FY19? If you could help us out with that number, and what could we end FY18 with?
Well, for FY18, we are looking at industry probably growing at 15 to 17% sort of range. And for FY19, as of now, I think it's too premature, but we expect that the monsoon is also reasonably good next year too. And given the push which is seeing from the government policy initiatives, so we should be looking at maybe about 7-8% sort of growth for tractor industry next year too, which is the third year in a row. I think we've seen the growth happening in the industry.
So 7-8% growth for the industry or for you?
For the industry.
And you would be growing anywhere between 15 to 17% is what you said?
Yeah, so our expectation is to grow double digit and also help in gaining the market share.
Okay, so in that case, if you could elaborate on what your market share is right now. I remember you telling us you're looking at what, 11.5% by the end of this year. So what is it currently and what is your target for next year?
So for the first 10 months till January, we are at about 10.4% market share. And normally, since we mentioned last time also, since we gained normally market share in this season and this quarter. So let's see, I think it's still 2 more months to go. So we expect, I think we should be somewhere around 11% plus this year.
All right. Mr. Madan, we have spoken about your tractors business. I just wanted to throw some color on the other two segments, your construction equipment business as well as your railway equipment business. Both those two, in fact, they have improved pretty well. What's the scenario with your construction equipment business? If you could tell us what kind of competition you're facing from maybe an ace. Do you expect this business to continue with its good run, continue staying profitable as well?
Yes, I think construction business, if you look at all the three verticals, have reported the best top line growth. So I think their volumes have also grown this time by almost 30% in the first 9 months of this year. So we're seeing a very strong growth on the ground. I think that sort of momentum we expect probably will continue going to next year.
Okay.
So yes, we have turned around this year. So we've broken even in this quarter. Will be this year really we expect to end slightly in the positive territory.
Okay.
And as far as the competition is concerned, I think every player has their own strong points and weak points. So we have our own strong point on which we'll be playing on.
How is the order inflow looking, sir? I mean, in both these two segments, is it looking good?
So construction, we don't maintain order book, but railway, we got a very strong order today. We're sitting almost 330 crores of order book as of end of December, which is, I think, the highest order book which we haven't seen in the lifetime. Wow. So it takes care of our next year's total numbers for this.
Absolutely.
And that gets executed in all of next year. What kind of margins would this order book enjoy, Mr. Madan?
So normally in railway, we are looking at margins that are somewhere between 14 to 16% range. So it will be that similarly.
Okay. Now, Mr. Madan, now before we let you go, you had guided for 11.5% market share by the end of this year, which you have reiterated. Next year, what are you looking at? Because, you know, if you take a look at the budget, there were a lot of tailwinds coming in, announcements coming in from for the rural sector from the finance minister, especially the MSP increase in the Kharif region or Kharif season. So, market share next year, what do you think it will stand at, and what kind of tailwinds do you expect moving into your orders in the next year?
I think the government initiatives are there for every place. It's not only for Escorts. So I think I'm sure the entire industry is going to benefit and will be one of the players in the industry. But like you said, since we are working for improving our share of market in the long run, so we expect to go back to our national share of 13-14% in 2 to 3 years time frame. So we will work in that direction only.
Okay, all right, Mr. Madan. Thanks so much, sir, for stopping by. I think the street likes what you're saying. The stock has moved to the high point of the day. Sounding confident in terms of the other smaller businesses as the construction as well as the railway business. Well, the railway business has visibility for the next 1 year at least. But the core business, that's the tractors business, expected to continue growing. Margins should definitely hold between 13 to 14% and definitely. So that's pretty good as well. Some part of the street expects it to move more than 14% as well. The stock moves to the high point of the day. It's a volatile trading session, but Escorts is doing its own thing as we speak. Well, on that note, we'll slip into a short break. On the other